Hey everyone, and welcome back to the channel. Today, we're diving deep into a topic that gets a lot of people fired up. Silver price manipulation. You've probably heard the whispers, seen the forum posts, and maybe even watched a few documentaries about it. The big question on everyone's mind is who's actually pulling the strings, and more importantly, who's benefiting from it all? Is it just a conspiracy theory, or is there something real going on behind the scenes? Let's break it down and follow the money. First off, what do we even mean by silver price manipulation? Essentially, it is the idea that the price of silver is not determined by the natural forces of supply and demand in a free market. Instead, powerful entities are artificially suppressing the price, keeping it lower than it should be. The primary mechanism people point to is the futures market, specifically through massive short positions. A short position is basically a bet that the price of an asset will go down. When huge institutions, often referred to as bullion banks, take on enormous short positions in silver, they can create immense downward pressure on the price. It's like a giant anchor holding the silver price down, even when physical demand is soaring. So, who are these bullion banks? We're talking about some of the biggest names in the financial world. These are massive commercial banks that have a significant presence in the precious metals markets. Think of giants like JP Chase, HSBC, and others who deal in enormous volumes of financial instruments, including precious metals derivatives. For years, analysts and silver enthusiasts have pointed to the Commodity Futures Trading Commission's own data, the Commitments of Traders report, which regularly shows a handful of large commercial banks holding massive net short positions in silver futures. This concentration of power is at the heart of the manipulation argument. Now, why would they want to keep the price of silver low? This is where it gets interesting, and there are a few key theories. The first, and most straightforward, is direct profit. By controlling the price swings, these banks can profit from their trading activities. They can initiate a price drop with their short sales, buy back their contracts at a lower price, and pocket the difference. It's a high-stakes trading game where they can allegedly influence the outcome. They create volatility and then trade that volatility. They can also earn fees from their clients and benefit from the bid-ask spreads in a market they heavily influence. But the rabbit hole goes deeper. Another major theory is that suppressing the price of silver, and gold for that matter, is a way to maintain confidence in fiat currencies like the US dollar. Historically, gold and silver are seen as real money. When their prices rise, it's often a signal that people are losing faith in paper currencies and the overall economic system. A rapidly rising silver price could be a red flag, indicating high inflation or economic instability. So, by keeping precious metal prices in check, central banks and governments, working in concert with bullion banks, can help maintain the illusion that everything is fine with the economy and the dollar is strong. It's a form of perception management. A low silver price helps keep the canary in the coal mine quiet. Let's consider another angle, industrial users. Silver isn't just a monetary metal. It has thousands of industrial applications. It's a critical component in electronics, solar panels, medical devices, and so much more. Companies in these sectors are massive consumers of physical silver. Think about tech giants, solar energy companies, and manufacturers. For them, a lower silver price is fantastic news. It means lower raw material costs, which translates to higher profit margins. If the price of silver were to double or triple, it would significantly increase their production costs. So, while these industrial giants might not be actively manipulating the market themselves, they are undeniably major beneficiaries of a suppressed price. They have a vested interest in keeping silver affordable. And what about governments and central banks? Beyond just maintaining faith in their currencies, they have other reasons to prefer lower silver prices. Many governments hold large amounts of their own currency, and U.S. Treasury bonds as reserves. A surge in precious metals could signal a flight from these assets, which would be disastrous for them. Also, think about the debt. The U.S. government, for instance, has a massive national debt. Inflation, which a rising silver price would signal, is technically a way to devalue that debt over time, but uncontrolled inflation can lead to economic chaos. By managing the perception of inflation through mechanisms like suppressing metal prices, they can try to keep the system stable for as long as possible. So we have the bullion banks profiting from trading, central banks protecting their fiat currencies, and industrial users enjoying cheap raw materials. It seems like a pretty powerful coalition of interests, all aligned against a higher silver price. But who loses in this scenario? Well, the most obvious losers are the people who are betting on silver to rise. This includes silver investors, stackers, and especially the miners. Silver mining companies spend enormous amounts of money to explore, dig, and process silver ore. When the price is artificially held down, their profit margins get squeezed, sometimes to the breaking point. A low price makes it unprofitable to mine lower grade ores, which in turn can lead to a long-term supply crunch. It's a tough business, made even tougher if the market is rigged against you. And of course, the average person who is trying to protect their wealth from inflation also loses out. People buy physical silver as a store of value, a tangible asset that can't be printed into oblivion like paper money. When its price is suppressed, their hedge against a failing financial system isn't working as effectively as it should. They are essentially being prevented from reaping the true value of their investment. Now, you might be thinking, if this is all true, why hasn't anything been done about it? There have been lawsuits, investigations, and even some admissions of wrongdoing. Several major banks have paid hefty fines for spoofing and manipulating precious metals markets. Spoofing is a tactic where traders place large orders they have no intention of executing, creating a false impression of supply or demand to move the price in their favor. So manipulation isn't just a theory, it's a documented fact in some cases. However, the fines are often seen as just the cost of doing business, a slap on the wrist compared to the enormous profits that can be made. The system is incredibly complex, and proving large-scale, long-term suppression is extremely difficult. Regulators are often outmatched and outgunned by the financial giants they are supposed to oversee. So, to recap, the primary beneficiaries of silver price manipulation appear to be the large bullion banks, who profit from the price volatility they create, industrial consumers who benefit from lower material costs in governments, or central banks who want to maintain confidence in their fiat currency systems. On the other side, the main losers are the mining companies that produce the silver and the individual investors who buy it to preserve their wealth. It's a David versus Goliath story, but knowledge is power. Understanding these dynamics is the first step for any silver investor. The manipulation, while frustrating, also presents an opportunity. The fact that so much effort is allegedly spent to hold the price down suggests that its true fundamental value is much, much higher. It's like a coiled spring. The longer and harder you press it down, the more explosive the move will be when that pressure is finally released. When that day will come is anyone's guess, but the fundamentals of soaring demand from both investment and industry, combined with a tightening physical supply, suggest that this game can't go on forever. What are your thoughts on this? Who do you think benefits the most from a low silver price? Let me know down in the comments. I read every single one. And if you found this video insightful and want to learn more about the truth behind the financial markets, make sure you hit that like button and subscribe to the channel. Thanks for watching, and I'll see you in the next video.